Hey guys, happy Tuesday and welcome to Sachs Realty's live show, Tuesday live show. For 4 years, we did a Tuesday night live. Now we're switching our schedule up a little bit and because we backed off some of the live performances and we're back. So every Tuesday, we will be doing a live update. Today, I'm going to talk about if I were buying a home, how I would go about it. And of course, I'd want a deal. But we'll open up with a couple things. You see my friends behind me here. I guess I'm amongst the clowns to some people in this industry. I want to play a little clip for you here. We're going to talk about it and dive in today. Let's go.
See these dramatic headlines? Your customers do. These guys are involved in the business of clickbait.
All right, just stop it right there. Stop it right there. All right, you see about now this guy, his name is Brian Buffini, and he's a real estate agent coach. And as we listen to the rest of the story, so I had an agent that used to work for me. He now lives in Florida and is actually my best friend's son. And, you know, the story went something like when he graduated high school, he wanted to be a real estate agent. And so he has his license down in Florida. But anyway, he sent me this yesterday and he said, well, I guess I finally hit it the big time. Mr. Brian Buffini has me displayed on a marketing advertisement that he has to teach agents how to ignore the noise of what's really going on in the market, essentially. Put agents above customers or clients in the case of an agent's fiduciary if they're under an agency agreement. Yeah, and so that's my thumbnail right there that says 150 plus housing markets doomed to crash. And by the way, this was a very fact-based, true, not noise, but true reporting from Lance Lambert, who knows more about the housing market and statistics as far as what's going on than Brian Buffini. Okay. But anyway, I thought this was an interesting way to start. We're going to replay it from the beginning so you can get the full flavor of it, so I'm not interrupting it. But it was very fact-based where Lance Lambert was saying that all across the country, the housing market is year over year declining in prices. Zillow just reported that. Zillow just came out and said that home values would continue to tick down is their expectation. And one of the reports that they just published not that long ago through the end of 2025. I'm now doing regional updates for you all. We're going to be posting these in a new schedule, breaking the U.S. down into the different locations. This week, this Friday, I'll be bringing you the Southwest, which includes the state of California. Nationwide, guys, home values are declining year over year in a lot of different markets. That's what Lance Lambert was saying. So, Mr. Clown, yourself, let's take a listen to this video.
You see these dramatic headlines? Your customers do. These guys are involved in the business of clickbait. Chaos, crash, market prices, chaos in the market. The end is near. Are you equipped to be able to cut through all of this noise? Do you know what to say? Do you know how to say it? Are you armed with the stats to show this stuff's not true? This is for clowns. You got to get informed. So come and join me. I'm going to help you cut through the clutter, give you the straight story, and get the clickbait out of your customer's mind.
I'm going to show you how to cut through the noise, cut through the clutter. I'm going to teach you how to navigate through the clutter at this free seminar. And then I get an email today, which is funny. Thanks, Mr. Buffini, because I have spent money on your products. So thanks for calling me a clown. But look at this. Look at the information that I got today. So I got an email today. I don't care, man. Out of everybody that you broadcast up on your screen there saying it was a bunch of clowns with clickbait noise, I'm a real estate broker. Okay? I'm in the business. Right? So at the same time you did that, you sent me an email saying, hey, Todd, you ought to come to my webinar where I can sell you products and teach you how to navigate through the noise and arm yourselves so that when your customers hear what's really going on in the housing market, you can combat that with it's not true. So you could say, well, okay, I'm sorry. Mr. Seller, that your house isn't selling for the price that we put it on. And by the way, I gave you that price, and that really comped at the time. And I think it really was a valuable price. It was the right price. But I'm sorry it's been sitting on the market for 4 months. We've had 3 price reductions, and I just can't get anybody to walk through the property. Now, look, guys, obviously, real estate is market specific. There are still subdivisions where houses are selling over list price. A smart agent is going to be pricing these houses right to sell. The house has to be in move-in condition. And guess what? Your buyers better damn sight have money. Because if they don't have money, if they're borderline, if they're just skating by on approvals, if they don't have a decent down payment, they're not buying this, okay? They're not buying this. They're not buying that the housing market never goes down. They're not buying the houses aren't affordable, that if you don't buy today, you're going to lose out tomorrow. And we are in one of the slowest cycles, not because of Todd Sachs, ladies and gentlemen, not because of Nick Gurley or any other of the people that he flashed up on the screen, not because we're saying that the housing market is tumbling or needs to correct. It's my business. I mean, I would love to say buy now before it's too late, right? But that's not practical. You wouldn't buy that bullshit, right? You're following me, you're watching me, you're listening to me because you have common sense, because you're understanding that things aren't right. The equilibrium is out of whack, right? It doesn't, your bank account, your salaries are just going to cost of living like food, insurance, auto expense, fuel. Anyway, welcome to our broadcast. As I said before, Zillow has in a report that, and houses are sitting on the market for longer, by the way. I mean, we are seeing the pickup. We're going to talk about what I would do today if I were buying a house. I could care less about Brian Buffini or what he has to say to get his own clickbait, because that's what it is. It's clickbait to get agents that aren't making it. 1.5, 1.6 million real estate agents just writing checks to fees and to people like Mr. Buffini in hopes that he will have the answer to make somebody buy a house or make somebody sell a house. And in all businesses, guys, we're not selling something like lunch meat or food that you have to eat. You can't make somebody buy a house. Hello? I don't care what kind of fancy footwork or salesmanship you have that you're saying, or bill of goods that you're selling somebody. You can't make someone buy a house. You can't make someone sell a house. This is a market where the numbers have to make sense, right? What you should really be doing is teaching agents how to be professional. Now, Zillow, like I said, Zillow said that they're expecting home prices to continue to tick down through the rest of 2025. And like I mentioned, if you want to stay in tune, the housing market, I'm Todd Sachs. I'm a real estate broker. If this is your first time to the channel, I don't consider myself to be a clown. Maybe some of you do, but that's okay, man. I have broad shoulders. I can handle it. Believe me. Believe me. I've been serving this industry for a very long time. And I've never seen unaffordability so bad in the housing sector, in the housing market, than it is right now. There's all kinds of craziness going on. You got the head of BLS being fired and somebody else, by the way, that I heard that maybe it's one of our guests that we had on our podcast. I'm not going to say who it was, but we had somebody that is being considered for that position. And I hope that he gets it, because if he does, we'll be able to get him back on the show and really talk about what's happening in the jobs market. That would be wonderful, because I've always said it's the last thread to this housing bubble. The only reason why we haven't seen this crash, well, there's multiple reasons, but one of the reasons why is because you're not seeing your neighbor yet being laid off or fired or let go or demoted or whatever, saying, company just saying we can't afford to pay you anymore, and you need both salaries, by the way, to pay your mortgage payment. And that's holding a lot of people back, because maybe they do know somebody that's been laid off, or there's some uncertainty. Anyway, today I want to give you some home buyer advice and talk about some of my strategies if I were to buy a home. It may not favor the agents or Brian Buffini for that matter. But there is a new report that came out from Realtor.com that says renters are financially better off than buyers. And I want to play a little clip that my friend and a fellow broker down in Florida, Phil Simonetta. If you're watching, Phil, you can comment in. We're going to take comments and questions, by the way, in today's show. But let's listen to this clip, and then I'm going to dive in. I can't wait to tell you my strategies, and agents may not like this. I'm giving them to you straight. I think I'm a pretty nice guy, but when I'm buying something like a home, I'm completely different because, some might say like a wolf in a sheep suit or something like that. I mean, I'm not trying to say that I'm not caring and kind and honest and open and transparent, but I am very straightforward. I'm very intentional. And if I'm buying a house for myself, I'm going for a deal. And I'm not talking about $5,000, okay? I'm talking about I'm going for a deal. I'm going to show you, we're going to dive in, we're going to analyze a couple listings, and I'm going to show you how to do some of these things yourself. And let's go. Let's listen to this clip.
A starter home is still more affordable than buying. A new report from Realtor.com shows renters save an average of $900 a month compared to homeowners.
News4Jack's consumer investigator Tiffany Salome takes a closer look at what this means for families in our community as part of our ongoing Addressing Affordability series.
Meet Joe and Andrea Biederman.
Several years. We've been putting money away and holding on to it.
They want to buy a home badly, but even after years of saving, the monthly payments are still just too high.
A few years ago at the time, we just couldn't make the numbers work, and we found this great rental, so it works for us.
It's not for a lack of trying. They've toured homes and even made offers, but hidden costs stacked up quickly.
Before we moved into this home, we put some offers in on some other homes, and that's where we learned about insurance and the property taxes and the HOA fees, and the affordable monthly became an unaffordable.
It's a financial reality many buyers are facing right now. Mortgage rates, insurance premiums, and taxes all add up. And in their case,
it was the difference between, $2,500 in rent versus $4,000 in a mortgage.
The numbers don't make sense.
Hang on right there. So maybe this is misinformation. Maybe what you're hearing here from Jacksonville News, maybe this is misinformation about these two people that want to buy a home, but they can't because of the affordability. Maybe if you teach an agent that you can avoid that, or you can get around that news, or maybe if you just cut your commissions, or maybe if you just went to bat for your buyers, or maybe if you just told them how to negotiate on the deal to actually bring that home price back down into the affordable measure, or maybe you teach them how to get some of the equity that a lot of these homeowners, $361,000, I think, is one of the reports that Bankrate.com had it's in one of my videos coming out this week, but I think it was like $361,000, the average equity that the mortgage bearer has in the United States today, $361,000 in equity. Maybe you could, as an agent, teach people how to negotiate to get that. Maybe you could represent them. Maybe if you're an agent, you could represent them and tell them, whoa, pump the brakes. Okay, this isn't affordable because more than just the mortgage payment is insurance and taxes. All right, let's hear the rest of this.
The $2,500 looks so much better on paper than paying $4,000, strapping ourselves.
In Jacksonville, the numbers tell a story of a growing affordability crisis. According to data from Realtor.com, the average rent for a two-bedroom home is around $1,500, but the average monthly mortgage, it's more than $2,000. That's a difference of $572 every month, or 38% more to buy
Okay, stop it right there. So what I'm probably thinking here when we're looking at this average mortgage payment or to buy a house, I would like to know what they're considering as the down payment, because any mortgage calculator that you pull up, or most of them that I've seen, or if you look at Zillow or Realtor.com or wherever, and they say this is what the monthly payment, if you look in the fine print, somewhere in there it says if you put down 20% on a home. So if you buy a $480,000 house, well, you could figure that out, okay? So I'd like to know where that data is coming from, but the bottom line is that it is, in a lot of cases, cheaper to rent. And what a lot of buyers don't realize, and this is what we need to talk about, is the remorse. A lot of buyers don't know what's been happening over the last several years, or the calls that I've gotten, or emails, or comments on the channel where the home buyers are saying, you know what, I screwed up. I bought a house in 23. I bought a house in 21. We didn't get an inspection. We can't afford it. Our taxes have gone up. Our insurance has gone up. Our insurance has been canceled. The mortgage company put a high risk policy on it because we couldn't get coverage because of where we lived. And a lot of people are waking up to the fact that as agents were learning how to really sell a house by saying, well, you got to give everything up. Maybe I'd like to know what some of the training was about with agents when the gold rush was happening. And they're like, look, just don't stop your buyer. Don't stop your buyer. If they want to, you encourage them to overbid on that house. Encourage them to waive their rights to home inspections. My attorney told me, I've heard multiple stories from my attorney about how in a court case, the home appraiser, because they did get a home appraisal, didn't check for moisture because the agent said, if you pull that moisture meter out on this job or any job of mine, I'm not hiring you anymore. What a lot of people don't realize, these home inspectors work for the agents. Most of the agents are giving them as referrals, right? And you don't want to be that deal killer inspector. So a lot of people had home inspections and the contracts of these home inspectors, man, it's ridiculous. I think it's a 72-hour course to become a home inspector here in Maryland. It's 60 hours of classroom time to free licensing to get your real estate license in Maryland. When you're looking at hiring agents, hiring home inspectors, putting all this stuff together, people don't even realize, man, they're dealing with such a mess. Was there more to that video? I think it was.
Be this hard?
I don't think so.
Our belts are pretty tight. And I feel like we're doing all the right things. We even have a side job. We could probably come up with enough for a down payment, but making that monthly payment happen, that's where it doesn't make sense.
Smart. Now I have a poll. I want to check the poll. And if you guys could vote on the poll, if you haven't already done so, I'd like to do that now. See what we have. So what's more important to you when buying a home? Be honest. The price of the home, it's not as high as I thought, honestly. I thought that we would see out of 133 votes. I mean, I'd like to see a couple thousand votes if you guys could cruise on over and start voting. The mortgage rate, 8%, the monthly payment. And I believe that because as Americans, we are conditioned to a monthly payment. I'm conditioned to an investment. And if I'm going to buy a house, it's going to be an investment. I need to buy low and sell high. If I'm going to sell, I'm not going to buy high and sell low. Number one. Number two, okay, I've seen this smoke show before as we were going into the 2008 crisis. Monthly payment, you buy a monthly payment, trust me, you're buying at the top of your monthly payment. One of the things that I teach is how to know how much home you can afford. I teach that at my Todd Simple Home Buying course, which is doing very, very well, by the way, SachsRealty.education, if you're interested in learning more about that. But you have to learn what you should afford, not what you can afford, but what you should afford, because like they're saying, they don't want to be strapped to a $4,000 mortgage payment and have money for nothing else. And they become enslaved to their house. They can't go out. They can't go on vacation. They don't feel comfortable even having kids. I mean, people aren't having children anymore. And a lot of people are just making mistakes based on what they can think they can afford in a monthly payment. So I'm telling you right now, and we'll pull that poll back up, the most important thing is if you're backing things out and you look at what you're comfortable with in a monthly payment, that's not the most important part, because you want to back that out. Like, what am I comfortable with? Because that's going to predicate what you should be buying, what price range you should be buying in, right? And I break it down into 3 different categories. And one is affordable, where you should be buying, and you can find a house where you can be very happy, that checks all your boxes and that is affordable for you, right? If you focus on your finances and your needs and what checks the boxes, you can do it. And then the middle category would be like, yeah, we can afford this, but it's really going to crimp our lifestyle, because if things break, we won't have the money to fix them without going into debt. And you think that will be a short-term thing, and then you put it on a 24.5% credit card. And then the third category is, I screwed up. This is crazy. We can't do anything else. And lenders will let you be in that category, by the way. They don't make you cut up your credit cards. The only thing they say, don't buy anything before you buy a house. Don't buy any major purchases, even though you can. Don't do it before you buy a house, because you may not qualify for it with your debt to income ratio, right? Maybe your credit's low and you shouldn't be buying because you've got bad payment history that you should get on some type of a plan to get yourself where you have money in the bank, right? So that you could put a more significant down payment. But buying, the price of the house, the most important part, folks, right? That's why, why? Okay, let me ask you something. Would you go out and buy gold right now if the Zillow of gold was telling you, oh, well, the gold prices are going down and they're going to go lower by the end of the year? No. You probably wouldn't. So what we need to do is find where you can buy a house now, if you want to, at a price that is much lower than what it is now or what it has been over the last 2 or 3 years. We have to teach you how to do that, how to shop for that, and then how to be that wolf and stand true to yourself and your own financial responsibility, your family's responsibility. You owe it to your kids if you have them. You owe it to your spouses. You owe it to yourself that you don't put yourself in a situation where you can't sleep at night because you can't make the payment, regardless of what slick salesperson's going to tell you that went to some course to show you how to navigate that noise. I see it has come up a little bit here, 80%. That's good, 171 votes. If you would, please take a minute and go to that poll, because I want to monitor that. Joe, don't let me forget. Joe's like the wizard on The Wizard of Oz. He's behind. We got Riley, too. They're like behind the screens, the curtains. But they do a great job here, and they're very important to getting our production out to you guys. Let's take a couple comments or questions, and then we'll dive into analyzing some properties, and I'll give you some hardcore advice on what I do when I'm buying a house. All right, what do we got? My realtor told me to stop watching you. Stop watching Sachs Realty. Stop watching that guy. He's into sabotaging his own brokerage to bring you guys the affordability crisis that's happening in the United States. Because I make so much money on YouTube, way more than selling houses. That's not true. And I'm not saying I would never do it, but I've been pounded by people that want to advertise on my channel. And I've turned unless they were a friend of mine that I was just mentioning their business, which I think I've only done 2 or 3 times in 5 years. The only advertisement that I do is for our own, which doesn't pay very well, SachsRealty.com and SachsRealty.education, where, people are happy about these courses. I'm working on how to sell houses too. And the primary focus is educating you so that you're sharper than your 60-hour of pre-licensing class realtor. It's funny because when you go out and you're interviewing agents, which people do poorly, not people that take my course, they're sharp. But they go out and they hire these people, and the commissions are, look, this big commission lawsuit, you guys have to negotiate, but the issue is here, let's say that an agent's charging you 2.5%. What about the agent that's been in business that's really good? Is that the same as the agent that just got their 60-hour licensing? Is that how that works? I do have a lot of agents that follow me, by the way, and I get their comments and their calls and their emails, and the good agents, believe me, they're not having a hard time with what I'm saying. They're saying, preach it, preach it, preach it. We should be educating consumers and making you guys smart so that you're not making stupid decisions based on FOMO, based on these other reasons, emotional reasons, being led by cartoon characters that are teaching people how to navigate objections. Let me teach you how to navigate an objection of affordability. Don't worry about it. You can always refinance later. You can always get 6 jobs. Plenty of work out there if you want to hustle. Grab a piece of that American dream, ladies and gentlemen. Yeah, I said monthly payment too. If you buy an expensive home or a cheap home, you put enough down, your monthly payment will go down. You can hopefully refinance a property if you bought it at the right price. All this crap that these date the rate realtors and that are in the same wheelhouse as the lenders that are saying date the rate, marry the house, date the rate, you can refinance later. You can't always refinance later. Sorry. If home prices continue to soften like they are and you bought one at the top of the market, you can't refinance without putting more money down, chances are, because if your house will have to go through another appraisal process and it'll have to appraise. And you'll have to pay for that. And you'll have to, in most cases, pay to refinance. Oh, and by the way, your amortization schedule will probably start over unless it's a lender that has some kind of special deal. Oh, but you can roll up all of your high-paying credit card bills into that if you have enough equity so that you can free those credit cards up so that you can buy again. Oh, it sounds like a great idea. Price is most important. If you don't take anything else away from this, price. Todd, wait until the banks slow the access to credit. We're seeing it happening now. The only reason we got Fannie and Freddie and FHA. In my opinion, FHA is like the subprime lender that we had pre-2006, 2008, because they dropped the credit scores down. 3%, 3.5% down on a house. If you're a VA borrower, you can go in with zero money down, ladies and gentlemen. You could start with zero equity. You could start negative. Back in the day, I'm talking around the World War II era, and before, you bought a house, you put 50% down, and you financed your mortgage was 5 years on average. That's it, 5 years, and it was only an interest-only loan. But then what happened is we take away the gold standard, we allow this asset class of housing, and we allow institutional buyers to gobble up America's single-family homes. We drop interest rates to all-time lows. We get a 2.74% 30-year fixed-rate mortgage, allowed the prices to skyrocket way out of home affordability. But we can navigate this storm. We can convince people that it's okay. You could still buy. You could still afford it. All right, let's take a couple more comments here. If you could wait to buy a house in this scenario, would you wait for certain market signals? We're seeing the market signals. I'm going to show you how to do this. I recently went under contract with a new build in new MPC in Florida. The base price of the home was $700K. I added in a pool and captured $185,000 in incentives. Did I mess up buying into this market? You know, Tyler, I don't know your financial situation, man. What I say to people is I never tell people not to buy a house because that would be bad. I'm not going to tell you not to buy. I don't know your personal scenario. If you have a consultation with me, I'm going to lay it all out for you. I'm going to tell you exactly what I think. It doesn't even matter if you're in the middle of buying a house, if you're under contract or whatever it is. I mean, I will give you my professional advice and professional opinion based on your individual scenario, but it's hard to do it in a comment like this because I don't know what your financial situation is or what your long-term goals are. Anyone buying a house right now that's not planning on staying there to 7 to 10 years and they're buying at the top of the market, price point, top of the market, if you're staying there less than 7 years, you may be making a mistake. Now, what kind of a mistake is that? Is it a big mistake or is it a little mistake? I don't know. If the market goes down, you may need to bring cash to the table to close. That's the bottom line. Hopefully it's not going to wipe you out, right? But it's a costly mistake. It's a mistake. I bought when I was planning on staying there for 3 years. I shouldn't have. I saw so many people go into neighborhoods or buy houses that are on cliffs that would have never bought a house on a cliff had they had more inventory to choose from. But they just had to have it. Their friends were buying the houses. Their parents are telling them you need to buy a house and stop renting. Their pride wouldn't allow them to move back home after college, though millions did. Millions did move back home after college. Some didn't have a choice. Some were just smart and said, you know what? I'm just going to move back home with mom and dad because I can save money. But I mean, looking at it, I know a lot of people that buy houses right now. They're buying houses today. But the idea is, can you capture anything if you got some good $185K in incentives? I mean, I guess that sounds good. You added a pool, you must be doing pretty well financially if you're putting a swimming pool in. And by the way, if you guys do a conventional rehab loan, I teach you the different loans in my course, but if you do a conventional rehab loan, you can put luxury items in there. So if you buy a house that you want to upgrade, you see a house and you're like, well, it's got polka dotted wallpaper and an ugly countertop, and I really don't like it, and I'm not going to buy the house because of that, but I could get a really good deal because no one else wanted it either. You can do a conventional renovation loan on that, and you could put a pool in the backyard too. So a conventional renovation loan will let you do a before and after appraisal where you can add luxury items to that purchase and finance it for 30 years, which is probably what you did, put it into your loan. So, I mean, a pool, an in-ground pool, depending on what state you're in, you're probably going to need to completely renovate that pool in 20 years. So if it's in your 30-year mortgage, I would probably try and buy that aspect of it down so that you have, the ability to absorb that. You're not paying for the old pool when you need the new renovations of the pool, putting new tile in, new liners, new coping, new decking, things like that. Government and bankers running the show love inflation. They increase their share of the pie all the time through it. Yeah, but what happens here as we're looking at housing inflation, we're up against a wall because and we'll pull the poll back up again. When we're looking at affordability, 7% mortgage is a 50-year running average. So for all of you people out there that are waiting for the 2.5 or 2 3/4 inch, 2 inch, this is a contractor in me, the 2 3/4% interest rate, if you're waiting for that, don't hold your breath. 80% still say the price of the home, 244 votes. Good, that's going up. So you guys continue to vote on that for me. But what happens is inflation, now we're in a spot. And President Trump, though, whether you like his policies, dislike his policies, like this administration, dislike this administration, whatever it may be, the bottom line is Jay Powell and company, the Federal Reserve, does not control mortgage rates. The rate that they're talking about when they say, well, if he goes 300 basis points down, that's 3 percentage points. Right now, it's about 4.5% is the overnight Fed trading rate. That's the rate that banks borrow money from the Federal Reserve. It's an overnight trading rate. Trump wants that to go from 4.5% down to 1.5%, 300 basis points, which is 3%. That has nothing to do with mortgages. We watched the Fed cut rates the last time mortgage rates went up. We see that people are like, oh, rates are plummeting. Mortgage rates are tanking. Now's your opportunity. Buy now, buy now, buy now. They're like 6.5%, guys. It's not much different than 6.78%. If you went to 5.5%, it's not going to move this housing market. I'm sorry. That is over. Over. The quicker that sellers are having your house sit on the market for 3 months and 4 months and you're pulling it off, or you're firing your agent and going to another agent, those days, forget about it. Give up some of the equity on your house, drop the price, and help somebody buy your house if you need to move. If not, keep it. That's what I say. Now, that's not the case everywhere, and I know in the comment section you're going to say, but that's not on my neighborhood. That's not on my street. I just watched the house go for over asking price. That's true. There are those scenarios. But when you're doing that or saying that, send me the address, send me a link to Zillow, send me something, send me an email. Let me know what you're saying so that I can look it up for myself and see what's really going on, because that's what your agent should be doing. Your agent should be seeing what's going on. Let's take a look at some things. So let's just say, what do I like to shop on if I didn't have the MLS? And I don't have the MLS in all states, okay? So as a shopper, consumer, which site do I like the best? I have to say that I like Realtor.com the best. I prefer it over Zillow. It seems easier for me to navigate. I think Zillow's gotten so convoluted. By the way, BlackRock owns a huge percentage of share of Zillow, and they just announced they bought more of Zillow. People think that BlackRock's buying single-family homes. They say they're not. They're buying mortgage-backed securities in companies like Zillow, which is Zillow is a powerhouse. So is Realtor.com. Realtor.com is not owned by realtors. It is Realtor.com. They are leasing or licensing the domain name from the National Association of Realtors. That's how they can use Realtor.com. They have no affiliation whatsoever besides that. So just to give you a little bit of information. But I like Realtor.com because I can navigate it a little bit better. So what do I do when I'm looking for a home and I'm outside of my MLS where I've got all the back end information? And by the way, I've got the Mid-Atlantic, and now I have parts of Florida and things like that. But let's say I were looking for a house in Charleston. Nope, that's not what I wanted to pull up. Well, let's look at this. We'll look at this first. I do like Zillow from a reporting standpoint. And a lot of people don't trust Zillow. They say that Zillow, because they're whatever, their Zestimate, or they sell leads. Everybody sells leads. If you say, I'm interested in seeing this house, you're getting sold to somebody, a real estate agent that wants to meet you on the front porch and jam a contract in your face and ask you to. That's the wrong way to buy a house, ladies and gentlemen. You want to have buyer agent consultations, right? You want to, before you start shopping, you need to decide, number one, am I going to hire an agent, or am I going to do this myself to potentially save thousands, in some cases $10,000 or more dollars in real estate commissions by just going straight to the listing agent, which is what I would do. I'm not going to use a buyer's agent to help me buy a house. And it's not just because I'm a licensed agent. It's because I'm experienced. I'm educated. Before I was licensed, I bought houses from the listing agent. Before I got my license, before I became a real estate broker. When I said we're doing these updates for you buyers or sellers that want to track, or just nerds in the real estate industry that want to know what's going on, you should subscribe to the channel, because every Friday at 5 p.m. I'm covering a region in the U.S., telling you what's happening in it from a macro, and then some city views as well, like popular cities like Charleston, South Carolina, which is pulled up. But I like Zillow because the reason why a lot of this reporting is legit, it's not just some algorithm based, is because Zillow gets fed in most of the country, most of the listings, unless they're banning them, which they're doing now, which we'll talk about, but most of the homes for sale are being pushed through Zillow, and Zillow is getting this data aggregated to them so they can do these market reports or these sampling reports and kind of give us a macro view of what's happening up and down. All right. So here we're looking at Charleston, South Carolina. We're going to pretend we're going to buy a house here. And by the way, I told you I'm not hiring a buyer's agent. I'm not telling you not to hire a buyer's agent. If you could hire me to be your buyer's agent, I would love for that to happen. That's why the best thing I can offer you is my course. But they say year over year, the home values have gone up a modest 0.6%, which is way lower than any of these macro housing economists have said that is going to happen. They keep getting downgraded and downgraded. But they're saying that the average home value in Charleston, South Carolina is $584,661. And the nice thing is they give you a max view here, which only takes you back to 2017. But that's okay. It's enough. We could see what happened here in freaking 2020. We were just cruising along, la-da-da-da-da-da-da-da, and 2020 hit, and home values went straight up. But you can navigate that. We can convince people that home prices are just going to continue to go up, ladies and gentlemen. What happened is here in 2022, around August, people went, oh no, interest rates went back to their 50-year norm of 7% and even went to 8%. And the buyer said, whoa. Now, what we have to understand about home values is it's all collectively put in one bucket. So if the rich are still buying homes, we could say, well, home prices are going up. Average home prices are going up. Median home prices are going up because they're skewed by rich people that have bought homes before, that came from California. You flooded the whole country, by the way, for crying out loud. You poor people. And the poor people that have to put up with the influx of, now, and I'm not knocking on Californians, but you guys really shocked the states of affordability scale by coming in, selling your high dollar stuff and buying the cheap stuff, raising the prices up. That's what happened a lot over the country, right? You guys move from the West Coast with your keep your West Coast policies in place, I hope. But a lot of people are pissed off at this. Believe me, I get a plethora of emails and calls about, I was just reading one the other day about Nashville, Tennessee. They said, oh my gosh, we got more Californians than we've ever had, and they're bringing their this and that, and they're blah, 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 blah. Look, don't be pissed off at me because I'm saying this. It's just this stuff that I hear. The facts are the facts. You sold your expensive houses, you had plenty of money left over, and you go, wow, we can afford this $600,000, $700,000. We could give you $100,000 over asking price because we want it. We're moving. We've already packed our crap, and we're headed east. Now, I guess one of the reasons why you left was because you weren't happy with what was happening in your state, maybe. I don't know. I have friends of mine in California. Brian Buffini's in California, I believe. What happened in 2023, we kind of bottomed out, and then we saw these values of rich people buying houses again, and a lot of them paying cash, not caring about the 7 or 8% mortgage rates, because that's the facts. That's the facts. Let's look at what happened here in the last year. Charleston. Now, somewhere around April was the peak. Then we've seen decline ever since. Reality soaking in, even with the rich people. They're like, well, the housing market looks like it's about to come down. Why do I want to buy now when I could save $100,000 on my $1 million house? People are realizing where they are. There is opportunity in this. People say, but Todd, it hasn't dropped that much. 584 from 587. You go, but that's not that much. This is a macro view. There's neighborhoods in Charleston that are cutting 15% or more. All right? But this is the important thing to look at. Until mortgage rate shock hit, we haven't seen home prices come even close to down since 2017. Now, they've gone up in value, but we're seeing the up, up, up. We're not seeing the down. So just in seeing the down is showing that we are having a market shift. Prices, values are coming down. It's a fact. So we're looking in Charleston, South Carolina. I'm going to expand this view a little bit. Hopefully I didn't screw the guys up. If I can see now, we're going to pretend like, I don't know, why isn't this working? There we go. Okay. Well, here's what we're going to do. I put in Charleston, South Carolina. Having a little bit of latency here, but we got it up. Went to Realtor.com, put in Charleston, South Carolina. I'm going to go to this price category, and the only thing when I'm buying a house that I'm interested in is who has knocked down their price. I don't care about anything else as far as price. Now, I care. I'm going to put my price range in, so you will do that, right? I don't know what your price range is. But I'm only looking at houses that are price reduced, period, the end. You tell your agent, that's what I want. I want price. If you're doing it like me, if I'm doing it, I'm not even going to the agent. I'm going straight to Realtor.com. I'm saying, show me the houses that have come down. I already know the houses, the home prices are way inflated to affordability. I already know that. Don't insult my intelligence otherwise. I'm looking at houses that have a 5 in front of them that need to have a 2 because some idiot agent, and it's been sitting on the market for 5 or 6 months. They've reduced it by $80,000, and they're still at 4 or 5, and it needs a 2 because it's a disgusting property. They did zero, zilch, nada to fix it up, to invite me to want to even be interested in moving my family in there. It's filthy. And it's sitting on the market, $80,000. A specific house is at $404 right now. It dropped $80-some thousand. It should have a 2 in front of it. Now you might say I'm insulting people if I offer them that. Guess what? Offer them that. If you have a real estate agent that says you're wasting their time because they're so busy right now, because they've got so much business climbing off. Man, people just I just have so many buyers and sellers climbing all over me, man. I don't have time to write you a lowball offer when a house has been sitting on the market for 5 months. I don't have time to call up the listing agent and be like, yo, what is up? You know this house needs a 2 in front of it. I know. I know. That's what I've been telling my seller. But put the offer together. I'll present it. Hey, there's a good listing agent. I've been telling them for months the price too high. I'm only looking at houses that are price reduced. Then I'm going to come over here to property type and put in what I want. I want a house. And then I'm going to go to listing details here right now. And you could select whether you want existing homes, new construction, whatever it is that you want. But I don't want you to unclick the pending or contingent because I'm interested in that. And the reason I'm interested in it because right now there are a ton of contracts falling through. Believe me, I've got a dozen or more buyers that I'm working with. We're just patiently waiting, looking at the market. I've got some updates. I don't even send, if you're going to have a real estate agent working for you, find an agent that doesn't need to send what they're searching to you. Ask them to decipher the information based on your checklists and then only send you the properties that fall into it because you become numb to it. What happens is you become numb to it. And believe me, you get buyer fatigue. You're like, well, the agent keeps sending me these things that are irrelevant. I'm going to be looking myself. And what happens is you just stop opening that agent's email. What I do to my clients, I say, look, you want me to send you the same thing that you're looking at, or do you want me to send it to myself and go through it and send you the ones that check the boxes? And most of them say, that's what I want you to do. Don't send me things that aren't relevant. When they get an email from me, they know it's important. So they actually look at it. They're not giving me some random email address that all their junk goes to that they never look at. So I want pending and contingent in my search parameters because a lot of these go back on the market. And then what I'm going to do, if I see something I'm interested in that's under contract, I'm going to call a listing agent up and I'm going to say, hey, look, would you do me a favor? I'm really interested in this house. Would you let me know if anything happens, if it falls through? I'm going to keep an eye on it myself. I'm going to save the search. I'm going to try and check the listing. But if anything gets shaky in this deal, would you let me know? So when you do that, you just hit done, okay? And then it's going to give you all of your, oh, look at this, $50,000 price break. I'd like to say, do you have any questions? But we're not live. You can't raise your hand. I can't say Mary or Joe or John or whatever. Tell me what you... So you'll have to send me an email. It's the best I can do for you. If you have questions that are very specific, Joe can pull up my email. There you go. There's my email address. It does take me a little while to get back. I get 500 emails a day. I try and go through and put in a subject line what it is because I try and decipher. Everybody's trying to sell me everything. Brian Buffini's trying to sell me on his course how to navigate the tricksters, the clowns. All right, let's analyze a house. We'll analyze a couple of them. So most buyers just jump in their car and just go. I teach you how to be strategic, how to first start with planning, how to fill out worksheets that are most important to you and your family or whoever's buying a house with you or just yourself. I teach you to the pros and cons of having an agent or not having an agent. I teach you negotiation skills, all right? Before you should jump in your car or click on Zillow or homes.com or realtor.com and say, I want to see this house. Why get your hopes up and put yourself in a situation where you're just wasting time? So we want to be serious before we start looking for houses. But let's take a look at this house. So a couple things that are important. Number one, I said price reduced. That's what I'm getting. But what I really want to do, and you can't do this in every state, all right? Because they're non-disclosure states. I think there's like 12 or maybe 11 or 13 non-disclosure states. Texas is one of them. There are ways to find it out. If you, I teach you, you can call the listing agent in Texas. If it's been updated in the most recent MLS, they can give you, an agent can give you prior sold information. You don't have to use that agent. You don't have to decide to use a buyer's agent to ask questions. Most of them won't show you a house unless you sign their silly contract. There are things that you should make sure that you have in that contract to protect yourself. But let's look at price history. So I'm zooming into this. I look at the pictures, but I don't put a lot of credence in the pictures because a lot of those pictures have been photoshopped, they've been manipulated, they look oohs and ahs. Doesn't necessarily, I mean, you guys have been in places before and you're like, man, this picture. Real estate agents have pictures from high school and they're 60 years old on their business card. That's it. They used to have business cards. You look at it, you're like, what the hell, is this you? Well, they do the same thing to pictures of houses. Well, we can't actually show what it really looks like. I had a client one time saying to me, could you just get rid of the trash in the Photoshop? No. We're going to look at the history. So if you cruise down here, it's going to have a couple of these folders that you can open up. I'm interested in the history. Two things that's important when you're looking to buy a house. Number one, has the seller, well, many things. Let's just go through them. Number one, has the seller dropped the price? Number two, how long has it been on the market? because I'm really interested in houses. We should have checked the box that said houses that have been on for longer than 30 days. I'm not looking at any houses less than 30 days on the market. The reason I didn't select it is because the button doesn't work most of the time. You put stuff on there because there's boosted properties and this and that and pay to play. In a lot of these sites, you could put whatever you want on days on market. It doesn't work. I'm like, wait a minute, I selected 30 days minimum on market, and this is brand new on the market 2 days. But I'm ignoring properties for the most part if it's less than 30 days. I'm not even looking at it. Why? We know that things are out of whack. I'm only interested in sellers that must sell and that overpriced their house in the beginning and pissed off all the other buyers that no one wanted to, and they didn't take any offers. And I want them to feel the market pain. And I want them to be dropping their price and be sitting on the market. And I want their agent hungry. Because if it's a good listing agent, they've worked, well, we'll use hard loosely, but they've worked to get that listing sold. They probably had some open houses. They, spent some time with the sellers. They've consoled them and, different things. And I'm interested in this because two things. This is what I meant to say on two things. I want to know, number one, when did they buy this house? And number two, can they share their equity? If they don't have any equity, I'm wasting my time. If I'm looking at a house that was bought in 2023 and 2 years later they're putting it on the market, chances are they can't take the price I'm willing to pay. They don't have any equity. Unless they put a massive amount down, but the massive amount down probably just overpaid the appraisal. So in other words, maybe it was worth $500,000. They bought it for $650,000. They put a massive amount down. Mom and dad gave them a gift of $150,000, but that's not helping me today. They got to pay their agent. They have to decide whether they're going to pay a buyer's agent now or whether a buyer has to write a check out of pocket. That's not financeable. You got to pay your agent if you're going to have a buyer's agent, and the seller's not offering anything, which is happening more than not. I just had a situation where that was just the case. So I'm looking here, do they have equity in this house? And do they want to sell that house bad enough to share it with me? That's what I want to know. I had an agent the other day said, Todd, they came from my website. They said, Todd, man, your buyers are tough. They called me up and said, look, they're educated. They're not tough. They're educated. They're not stupid. I'm not saying that buyers are all buyers. I guess. Let's look here. We'll start down at the bottom. Let's take a look at this. See if we can show more. All right. This house was built in 2011. Let's follow the trail. It was sold for $255,000 July 1st of 2010. In September, what happened? They listed it for less than what they bought. October 3rd, they raised the price. By the way, here's what they do. A lot of people will say, well, my clients aren't looking for houses. They're looking in certain price parameters. So an agent will set up a search, and that was probably the case, 15, 16 years ago. The internet was just getting started, wasn't it? YouTube just started, I think, in 2005. So what agents did was they put your home in a price point like $100,000 to $200,000. Well, people weren't searching for, if they could afford $250,000, they would look from $200,000 to $300,000. That was the way it worked in the old days. So the agent would set up the search parameter based on that. And a lot of the agents would say like, well, maybe I'm not hitting the right market. Maybe we bumped the price up a couple $1,000s. That's probably what happened here. Let's get in the twos so we can attract a $200,000 to $300,000 buyer, because that's how agents bracketed price ranges. Oh, they increased the price again. February 2011. Maybe they changed agents. February 16th, they took it off the market. They put it back on in March. Maybe they changed agents again and they sold it for $198,000. In June of 21, now we're in this ramp-up period, it doubled in price from 2011 to 2021. So they thought, they put it on the market June 23rd, 2001. They said, you know what, let's try and get 447, 125.53 price increase from the last sold price. They decreased the price 21. They decreased, or they relisted it again for a decreased price of $399,900. They took it off the market. They put it back on the market for $410,000. They sold it for $410,000 in September 2021. They doubled their price. What happened, guys? Here in March 7th, 2025, so they bought it for $410,000. Now let's say they put $12,000 down, $15,000 down. They're at $395,000. If they didn't refinance, they're at $395,000. Now they need 10% to sell the house. So I'm doing this math backwards. If they're paying realtor fees, transfer recordation costs, going through whatever, any kind of repairs or maintenance that a home inspection may pull up. But let's see what's happening here. Since March of 2025, they put it on the market $525,000. They removed it again, probably changed agents. They're now at $499,900. Now, take 10% off of that, $50,000 gets us to $450,000. That's probably their cost to sell the house. They bought it for $410,000. So if they didn't do a home equity loan, if we're $450,000, they're not going to sell it. They're probably not going to take any less than $460,000, or they're going to be underwater what they paid. So when you're looking at a house like this, you have to decide, is it even worth going to? Is it worth, number one, 125% more than what it was 10 years ago? Or even more than that, you're probably at 135% more than it was 10 years ago. Is the house worth it? And what can I get for that kind of money if I find a house that I can do some heavy negotiations on? Let's look at this other house. This one looks like it's a little bit older. They had the last price drop. I don't know yet what it's dropped from originally, but they just dropped it 16.4. Let's take a look at its price history. We'll go all the way down to the bottom. And we'll check it out. It was built in 1955. Somebody bought it in 2005 for $95,000. Look at this. It was sold in 2006, sold in 2007, sold in 2008. Look at the difference. In 2006, they bought it for $95,000. In 2008, they sold it for $230,000. You know why? Because when we were leading up to the housing market crash, the GFC in 2008, my neighbors started buying and selling houses. You could literally buy a house. It was called flipping, the illegal flipping. You could literally buy a house, do nothing to it, and sell it 6 months later for more money. Now, if it's an FHA buyer, you had to wait 90 days because a house couldn't transfer for an FHA buyer from one seller to another buyer within 90 days. It's still that way today. And that was FHA borrowers. But look at this craziness, right? That's what happened leading up to this crap. They were like, well, let's just buy it and sell it and buy it and sell it and buy it and sell it and buy it and sell it. And then all of a sudden, boom, whoa, 2008 comes along. That buyer sold it for a loss, $204,000. They took a bath, $25,000, 10% back then. Then it was sold for even less again in 2010. Maybe this house was haunted. I don't know. People seem to move out of it very quickly. I doubt that it's haunted. But look at this, guys. So let's check it out. So the people, it looks like the last buyers paid $197,000, and now they want $533,500. That I like these numbers. If this house checks the boxes, I'm ready to play ball. I'm ready to play ball. I want to see, because they got this goes along with what bankrate.com said is the average mortgage holder has $360,000 or whatever it is in equity. I'm liking this one. All right, let's take a break from this and take a couple questions. Yeah. It's the time for disrespectful offer. Keep in mind, I call it realistic offers. I call it reality. I call it like your house is not worth what you're asking for it. Okay? And that's the kind of conversation that I'd have with an agent. Hey, look, I'm looking to buy this house. It's been on the market for 9 months. I see it, I see what they paid for it. Do they want to sell the house? I don't even want to look at it. Do they want to sell the house? If you don't get a buyer's agent, don't you still need to pay real estate attorney for every single offer you submit? No. You can have a real estate attorney if you want. A listing agent can give you all of the documents that you need. Let me tell you something. Take my course. I give you every step how to do it. There is not, if I'm listing a house, I would be nuts to tell you, if you said to me, I don't have a buyer's agent, there's creative ways. First of all, you want to find out if they're offering a commission, because there are creative ways you want to know how to negotiate. You got to learn how to be savvy. You have to learn to be sophisticated. I've been in this market for a long time. I've been serving the housing market since 1989. I hate to date myself like that. I know I look pretty sharp for my age, I hope. I mean, I'm kidding. Guys, nobody's telling you this stuff. I'm telling you. What I'm sharing in my course, no one's telling you. It's $300. If you can't afford $300, you probably shouldn't be buying a home. Nobody's sharing this stuff with you. I'm telling you how to do it. But no, you don't need a real estate attorney on every offer you put in. A listing agent, if they want to sell that house, they cannot represent you if you're self-representing. They can't represent you. And some are transactional brokerage states, and they may try and get you to go for that type of thing. If you're not going to have a buyer's agent, then just represent yourself, in my opinion. I recommend you having a good buyer's agent. I'm not saying that I'm recommending that you do go unrepresented. I'm not saying that at all. Okay, but if you're going to hire a bad agent or somebody that's brand new in the industry and they're going to charge you a hefty fee, or they're going to prevent you from buying a house because they're not offering a commission, and you sign some contract saying that you had to pay them, and if you don't have the money to do it, then you can't buy that house. There's ways around that. I go over specific steps. But here's the thing, and I'm not an attorney and don't claim to be, but I'm a real estate broker and I know this industry. But if you go to a listing agent, you say, put all these things together for me, they're going to put them together. They will give you the package. They have the addendums, the county addendums. It's not that hard. It's not that sophisticated of a package. You just need to be educated on the process, the steps. But what happens is, yeah, you're going to have a title attorney that you're going to hire a title company, whether you have an agent or not. And you could certainly say to that title attorney, can you do me a favor? I'm going to use your title company. They're probably going to charge you not very much. If you go to a real estate attorney, open up your wallet and bend over. Because you're going to spend, if you're going to spend $400 or $500 now, that's crazy. But no, you do not, in my opinion. You want to have an attorney, have an attorney. I'm not an attorney. But the forms, the National Association of Realtors, one of the benefits of being a realtor is that you have access to the forms. You become a member of the national level, the state level, and then a local board. I belong to like many of them, several of them, because we've got agents that are in different areas. but they have this database of forms, and they're very neutral. They're forms that if a realtor and a listing agent who's a realtor could certainly use these forms. They can give you these forms. They just can't tell you how to fill them out, but you can read. I can't tell you how to fill it out either, as if I'm representing you. I got to say, what do you want to do to this? What do you want to do that? I'm not a lawyer. I can't write your addendums. They teach you that in school. You can't write addendums. I'm always telling my agents, look, don't write that addendum. You have the buyer say what they want to say. You take that, copy and paste it into the blank addendum, and then the contracts between the buyer and the seller. The agent is not supposed to be giving you legal advice any old way. Hello? That's what a lot of people think. They're like, well, I'm paying this money because I get representation. No, you don't. It says it right at the top of the contract, at least in our contracts. If you don't understand this crap, seek competent counsel. You know, I don't know one rental at a time. I know, he knows of us. I appreciate the super chat. Thank you so much. Leave it up. I did a show not that long ago where we pulled out the mortgage calculator, and I want you to do it as well. In fact, I don't know if it would be hard for you guys to pull up that Chase affordability calculator based on income, I think is what how much house I can afford. I'll show you this. I don't get endorsed by Chase. I'm not telling you to use Chase or go to Chase or whatever, Chase, but I do like this. Is there any way that I can control this? Can you come over here and just kind of set it up on my, yeah, we're gonna go over this here because I want to show you guys the difference between a 6.5% or a 7%, and a lot of people don't realize it. That it's not. It really isn't that much of a difference. Now, if we're good. All right, thank you, Riley. See if I can. All right. Okay. Hopefully everybody can see my screen. We're live. It really doesn't do me any good to drop these in the show notes, but if you take note of this, if you could see the URL up there, it's just chase.com, or if you search chase.com home affordability calculator, it's pretty cool. And you just basically, how much can you afford? Now, this does not include property taxes and insurance. So again, you just come in and you say, my annual gross income, let's say it's $140,000, and you have to determine what your debt payments are. And your debt payments are things like your credit cards, that you're not paying off, by the way, that you're revolving, student loan debt, car payments. And believe me, when you look at, I'm paying $500 or $600 a car. If it's two buyers, that's $1,200. Then you're looking at two buyers, student loan debts at $300 or $400 a month. That's another $600 or $700. So let's just say you have monthly payments of, we can even drop it a little bit. Let's say $1,500. Okay, and you make $140,000 as combined income. Your down payment money. Now this is a $465,000 house. Ain't nobody putting down. Well, they may be putting $15,000 down, but it's probably going to be like, and this is down payment money. This isn't paying for your realtor if you have to pay out of pocket because the seller's not offering anything. This isn't counting points with your lender, lending fees, title fees, inspections, all of the different things that you should be doing and have money prepared to do. But let's just say that we leave it at $15,000 down and you do a 30-year mortgage, and let's just say it today at 6.5%. That says that you can afford a $485,000 house, okay? So let's just change this then and say, well, let's just suppose that rates go down to 5.5%, or Easy on the mouse, Todd. 5.5%. 485,000. So that bumps your affordability up about $45,000. Okay. That's if mortgage rates drop and these scenarios are the truth. Your monthly payments are only $1,500 a month besides that, and you're putting $15,000 down. So, which would be 3% about on this $530,000 house. So the question is, can I buy that $530,000 house today at $485,000? Because that's what I want to do. I don't want to wait on a 5.5% mortgage rate. I want to buy it today for what it would be at today's rates. I don't want to wait and pray for a 5.5% mortgage rate. But the realization is that a buyer today doesn't have $1,500 a month in bills. They have $2,000 a month in bills on $140,000. So if you have, let's just say you have make $70,000 a year, chances are you're spending $1,000 a piece in bills. So if two borrowers at $140,000, so if we just take this to $2,000. So you have to be honest with yourself. That's why I say go to this calculator. It has nothing to do with interest rate so much, but telling you based on your salary, based on and your income, based on your debt, based on the mortgage rate, and whatever, how much house can you afford? Look, we were at $485,000. All I did was change that debt payment $500 a month, and it dropped your home price down to $457. Now, let's look at that and say, well, let's raise it up to 6.5%, where we are today. $457. Okay, so now you're at $418. All right, so it's not that big of a difference when you're talking about purchase price of the home. You may jump up and down and say it's changing your world. It's not. It is not changing your world. $450, $420, not changing your world, dropping it to a 5.5%. We're in debt. Consumers are in debt. They're carrying debt payments. This is what's really going on. So a 5.5% is not going to. Homes are priced right now at 2.75%. Because we haven't seen the massive price reduction from when you had 2.75% mortgages. 5.5 ain't saving today. It's not saving the sellers. It's not giving you that much more in house. You can find a house and negotiate the price down. And then if rates drop, and I'm talking drop, not 5.5%, but 4.5%, then you refinance. Okay, because you bought right. Let's see what the poll is, because that's important. Let's look at this poll. Oh, wait, I guess it would help if I got on the right screen. Thanks for doing that, by the way, guys. Still, the price of the home, the majority of you, thank you, are saying the price of the home is the most important thing. It is. We'll take a couple comments and questions, and then I want to show you two other things before we go. All right, I want to give you a resource. Okay, I'm a realtor who absolutely loves your content. Thank you, Ryan. And then he's going to tell me that I'm full. No, I'm kidding. This is the time to evaluate how honest a realtor is, because the market has shifted so dramatically. Every agent needs to be explained this. I tell you what, Ryan, I would love to have you on the show. I would love for you to come on the show. I don't know if you're seeing this, if we can get a hold of him somehow, but take note of his name. I'd love to have Ryan if he's willing to come on a show, because I like having agents, I don't like having agents that agree with me, because believe me, there are plenty of agents I have. Phil Simonetta doesn't agree with me and on a lot of things, and I don't care about that. He's a friend. He's it's somebody that at least we're aligned to the point that we aren't trying to peddle a bunch of BS to try and tell you to buy now, make yourself financially destitute, to where, God forbid, one of you loses a job or somebody wants to stay home and raise kids that you can't. Price daycare lately? Thanks, Ryan. Buying in Chicago, no new construction to complete. How do we deal with this scarcity as a buyer? Look, cities are we have very little new construction in Maryland. I mean, that's one of the reasons why they have tight regulations. The money it costs to build. I mean, when I would tear a house down and build a house in a lot on a tear down, it got so crazy with sprinkler systems, water flow, making sure I had to upgrade the street because their water pipes were clogged. I couldn't get the flow rate. So I had to find out where the flow was good and upgrade all the way to the house and, to build a house and the impact fees and the county and $2.50 a square foot and for this cost and that cost and this, everything else. And your water can't go anywhere. It's got to stay on the property. You got to have rain gardens, all these different things. What do we do prior to this? All of these regulations, the soft cost of the engineering, the architecturals, the blah, 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 getting it through the system, blah, is one of the reasons why you pay so much for a new house, and then the products are junk and all that stuff. I can go on and on and on and on and on. But yeah, new construction's not saving you, man, because chances are if they were doing new construction in Chicago, you're paying through the nose for the soft costs. You're better off finding something that's existing, negotiating on something that's existing, finding homes on the market for more than 30 days. Looking for sellers that can do price cuts to make the deal happen. And then, I didn't even get to this part. Boy, let me tell you something. Give me a home inspection. I want 3 things. I want the seller to pay for repairs, replacements, and give me money back at close. I want it all. I want it all. We're going to negotiate on the price of the house, and then we're going to have inspections. And I'm not just having some 75, 72-hour, weakling that is afraid to call a house for what it is. I want somebody that knows what they're doing. And I want somebody to go through and pick that house apart. Sorry, I got to know what I'm buying. I may not ask for everything, but I need to know what am I buying here? I'm sorry, you're too big to go in the crawl space. Well, you better bring somebody that knows what they're doing that can fit. And you better know what to ask. Even if you have an agent, before you have a home inspection, you better know what all to ask them before inspection day, because those inspectors can only do so much. So it needs seller cooperation on inspection day. I'm making sure that if we're getting home inspections, those things are being done and we're calling it off. And the seller can pay for a reinspection because they didn't listen. They didn't do what we asked. Now, you may be sitting there thinking, well, I'd hate to have this guy buying my house. Look, this is a house. I'm going to pay 3 times amount for the house if I'm financing it over the next 30 years. I pay $700,000. I pay $2.1 million. Hello? I can't write off my interest anymore, all of it. I have no deductions like investors do that are competing with me. I got to make sure that I get this right the first time. I got to be sharp. Leave that up a second. There is not a home shortage. Do we understand that? Many people own multiple homes. Your houses are rentals. They've been being bought up for years, for decades. We let Wall Street buy our single-family houses back in the GFC. It was the easiest way to deal with it during that time, that administration. We don't have a housing shortage. We have people that are stuck in their homes because they have golden handcuffs on with their rate, and you got one person living that's 60, 70, 80, 90 years old living in the house by themselves that should be living with a family member. There's one person living in a house, two people living in a 5,000 square foot house because the kids have moved out. But it's paid for, or they have some ridiculously low mortgage on it that they're basically buying a house for half the price if they were to sell it and buy something else today. It's a mess. What else we got? Purchased my current home end of 22 for $800K. Bought down the rate at the time to 5.8 against all expert recommendations. First year the home needed new HVAC and boiler, $45,000. Okay. Paying top dollar for a house. The sellers were happy. Let me tell you something, man. This time for the sellers where nobody was getting home inspections. I mean, if you could walk through a house and it's clean and you have an agent that knows what they're doing and they can look at it and you're in a competitive market and you want to give up your home inspection right, I hope you had somebody that knew what they were looking at least being able to, this is common story after story after story. I get calls all the time where people say, hey, I bought the house, I had insurance. I got a letter 3 weeks afterwards saying they did an evaluation on my home, and if I don't replace the roof at $40,000, they're canceling my policy in 30 days or whatever. Like I said, Maryland, most home inspectors, I don't know about different states, but Maryland, 72-hour course to take a home inspection course. A lot of people flunk out of different things and get into other things because they think it's an easy ride or they can do a great job. I ain't hiring that person unless that person just did the 72 hours to get their license, but they built houses for 15 years, and now they're just dedicated to helping people. That's the kind of 72-hour guy I want. He's been in the trenches for 15 years, 20 years, 30 years, knows what he's doing. He was a contractor, still a contractor, but uses his inspector role to effectively get jobs. That's okay too. I don't mind somebody doing that, right? As long as they're honest and they're giving good and your agent has a clue and they're not like, this guy's just trying to rip you off. But, I mean, it could be a good resource. A local inspector that's a contractor in the neighborhood. Everybody needs to know somebody. A handyman, a do-it-all, can help them, whatever. You own a house, you got to fix stuff. What is a good payment if you can afford? What is a payment you can afford if you're underwater, other than you can keep paying to stay in your money pit? Yeah, that's right. What's a good payment? I would rather have a higher interest rate, drive these prices down to reality. I'd like to see 10 or 12% mortgage rates. If I woke up tomorrow morning and I heard mortgage rates skyrocketed to double digits, I would jump up and down and probably run laps around the neighborhood. Don't bank on that, by the way. I can't run very far. All right. Let's move on. I want to show you two resources, and then we'll call it quits for today. One of the best things you can do for me, guys, check out, if you're a home buyer, look at the course. Gosh. I'm telling you, man, I'm in a place on YouTube where if you didn't like the course, the comments would eat me alive. I've got nothing but positive feedback. I've had people on YouTube comment, and I have somebody reviewed us on our Google about the course. Brand new. It's only been out a couple months. Got a lot of students. Great feedback. Check it out, at least. If you're going to buy a house, the best thing, a way that I can help you individually is that. The other thing is that I want to say is, if you're going to have an agent, oh my gosh, make sure it's somebody like Ryan that commented earlier. All right, let's take a look. A couple things. I'd mentioned there's some financing options that you have as a buyer that kind of puts you into kind of a different category, which are renovation loans. And this is a great product, especially for people that maybe have some money saved up. You have some time on your lease, or you could extend your lease, or you can move in with mom and dad. Even if you have young kids, I mean, if it's temporary, maybe you just get out of your lease, move in with mom and dad, try and get yourself a house where you can really capitalize on a great deal. And then you can use the renovation loans, by the way, that are through FHA or conventional. They're great products. Conventional is going to give you luxury products if you are a more qualified buyer where your credit scores are higher, your down payment's a little bit more, and you've got some flexibility. That product is not as limited. The luxury renovation loan, or the renovation loan, you can do luxury items. You don't have to do luxury items, but that's a conventional renovation loan. The other one's an FHA renovation loan, which is kind of capped. They have like a streamline and like a full blown, but you're still limited on what you can borrow for renovations. But I'm going to show you this site, and I've shown it before if you guys follow me, but it's HUDhomestore.gov. And these are government-owned properties that have been repossessed, foreclosed upon. And we're starting to see where this is picking up. We are getting more and more foreclosures. They say that foreclosure starts have jumped up, that more people are, I'm sorry, if you're losing your home, I'm sorry. I don't, but sometimes it has to happen, right? Whether you made a mistake or you went through some financial hardship or whatever reason. I mean, it's not fun to go through. But that is reality of life. And but you can click this interactive map, HUDhomestore.gov. It's an interactive map. I'm just going to click on Maryland because that's where we are. And it's 13 properties that are available. But you can see these properties. They're different counties. It's just a good resource for you. You can click on them. You can see there's a couple things that are important to know and this is good protection for you. And a lot of people say, well, when you have these institutional buyers, Todd, what can we do to stop them or slow them down? Well, the problem is that a seller doesn't want to be capped on who's willing to pay them the most amount of money, and you can't blame them. So you can't say to a seller like the government can, as the seller, they agree to it. You can't say, well, for the first 30 days, we're only going to allow it to be owner occupants or nonprofits. But HUD does that. It protects a buyer. Now, some investors do lie. I heard that they're cracking down on it, that, they're seeing if you actually put your driver's license into the house or whatever. It's not hard to determine if you're doing mortgage fraud, or buyer fraud. I wouldn't want to lie to the government. But if you look at stuff like this and you see listing period exclusive, okay? What that means is for the first 30 days, so this bid opens on 8/15, but you can see on all of them, listing period extended. That means all bidders. That means that no owner occupants bought the house. Now, guys, you can get some pretty good deals here, and you can get the financing from FHA if you qualify. Right, so you could actually buy a house that hasn't been loved, it's gone through foreclosure process, and that happens a lot because people, you look at it, and you go, it's kind of dungy, but it doesn't look hateful, but the carpet, the flooring, the whatever, the kitchen, and you can look at these houses, and you can bid on them through HUD. Your agent, if you have an agent, your agent can put the bid for you, but you can reach out to the listing agent too. But this is a good resource for you, okay, that you can click on, go to your state, check it out, know that there's an option for you. And the other thing was there was one other. Here we go. I just wanted to show you. There is a site that specializes in podcasts and stuff, Bigger Pockets Podcast. Just a shout out to them. A lot of real estate investors, small timers, that want to get into it. A lot of them follow their data, things like that. But they just said bank-owned properties, this was 22 hours ago, bank-owned properties rose 34% nationwide, how real estate investors can use foreclosure data to discover investment opportunities. Guys, you can be this investor. All right. If you're out there and you're looking to, that was crazy. And looking to, that's what happens when I touch stuff when it deals with technology. But if you're out there and you're trying to find a deal, you want to be creative and you have energy and you have resources and you want to learn, I want you to be successful. I don't want you buried in debt. I don't want you buying something that you're going to call me back 2 years later and say you're in foreclosure. Be smart. Get my course. Thanks for watching. Share this video. Subscribe to the channel if you haven't already done it. I love you guys. I love my audience. It's the best audience in the real estate genre on YouTube, in my opinion. See you next time.
Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.